Let's, bring in Sunil Singhania as well, who's now joining in. Of course, needs no introduction, market veteran. Sunil, great to have you with us here. Thank you very much for your time. Your sense on the budget first, and then a little bit on the market reaction that we are seeing, an exuberant rally and a sharp sell-off after that. Go on, Sunil.
Good afternoon, Prashant and team. I think as far as budget is concerned, it was quite a good budget. I call it like a simple, short, structural, and at least for a brief period of time, it was a smiling budget. It gave all of us a lot to smile for. So I think from a budget perspective, from a directional perspective, from a structural perspective, the finance minister has done everything what she could do in terms of laying out the roadmap as far as their focus on the growth in India is concerned. So no complaints from the budget. Yes, the markets have taken a knock because of some stocks from a particular group getting slammed, and collaterally, particularly the public sector banks getting slammed, and obviously some insurance companies because of a provision in the budget which is slated to be slightly negative for them. But I think otherwise the budget has been pretty decent. We don't see any cause of worry. In fact, we are very enthused with the increase in the budget allocation as far as capital expenditure is concerned, the reduction in taxes for across the spectrum, and also no tinkering with the capital gains tax, which was feared over the last 15-20 days. So all in all, a great budget.
And I'll just come to you on market, Sunil, because that's a bit of a head scratcher as well. But our colleague Sapna is joining in on the phone line from Delhi. There is this sort of capital support which has been announced for oil marketing companies. I think 30,000 crores worth of it. There was a bit of confusion in terms of what this is. Is this going to be used to subsidize, fuel prices? That is not the case, apparently. Sapna, tell us more. Afternoon.
Yeah, hi Prashant. I think there is clarity here. It's completely a capex outlay, 35,000 crores, and out of which 5,000 crores will be for strategic storage, filling of the oil reserves. Much of it had got emptied. This was there in the budget since quite some time. So 5,000 crores is allocated for that. And the other 30,000 crore number that you are talking about, that is specifically towards achieving goals of energy transition, energy security, and net zero. So this is what it is basically. There is no question of this money being used for any kind of compensation for any kind of losses that OMCs have incurred. Something has been given to them on LPG last year. I think there is still a case, or there's still a demand for some kind of compensation on petrol and diesel losses. And the other big point, if you observe in this budget, Prashant, just like to share this, in fact, in the last 4 to 5 years, I think this year's petroleum subsidy is the lowest. The LPG subsidy, I think, in the budget is around just 2,257 crores. This also basically means that, last May, if you recall, the finance minister had announced additional support for, free LPG cylinders to basically, lessen the impact of the Ukraine conflict, with oil prices shooting through the roof, gas prices being high. But there was so much subsidy that was given over here. I mean, almost all of it had been absorbed by the government. So there was an additional allocation that had been done. I think that has not been, kind of taken forward. I guess that was only for the previous financial year, FY23. So, in fact, you can say that this year's LPG subsidy has been kept at the lowest in the last 2 to 4 odd years.
Sapna, thank you very much for those details. By the way, 17,500 has been breached on the Nifty. Just 2 levels to track from here on the way down. One will be the recent low. In the carnage that we've seen over the last couple of days, the Nifty had taken support at 17,403, 17,405. So that's an important level, 17,400. And one level below that will be the 200-day simple moving average, 17,290. So just just watch out for these 2 markers, because we're descending very, rapidly now. It's 17,468. So in a matter of minutes, we are losing a couple of percentage points. We had invited Sunil Singhania of Abakkus Asset Management on the show now. Sunil, you gave us your view on the budget. It gave you a bit of smiles, but now many people perhaps are crying a bit. What do you think is plaguing the markets right now? What have you made of the reaction that we've seen in the last 1 hour?
obviously, as I said, it's been a very concentrated kind of reaction, and that is helping maybe the overall market sentiment, particularly the public sector banks, apart from the insurance companies. And I think the concerns which were going on for the last 7, 8, 10 days, and which seem to have been allayed over the last 2, 3 days, are again coming up. I frankly don't have a view on what is happening there. But obviously, the market does tend to get worried when there are some sharp movements in a few stocks. And I think that would be the case. Foreign investors have been selling last 2, 3 days. Maybe today's number also might be a sell flow, and that might also be putting pressure on the markets temporarily.
This constant, I mean, look at Adani Ports is down 25% now.
Even Ambuja Cement.
Yeah. Ambuja, I mean, this is, just complete collapse, right? I mean, in a single day, 0.25% of the value after the correction we've already seen. Losses kind of feeding on more losses. And this is incredible. 468 on Adani Ports, Enterprises, Ambuja Cements, as you said, 20%.
We're 500 points off the high on the Nifty.
On the Nifty.
230 points. Now, this is panic. This is absolutely sheer panic. And, of course, it's being, the epicenter, of course, is what's happening with, the Adani stocks and names like Adani Ports, which were considered to be financially strong in that sense.
In terms of the texture of the market, it's very, very important that we see a bit of a bounce from these levels because we took support at around 17,401. We bounced off that, and the 17,500 put was getting written for all these days. Even when we were at the low point of the day, the premium out there wasn't moving up. But now it seems, that we're breaking down. So it'll be important, at least on a closing basis, we see some bit of a bounce from these levels, and we're down 250 points.
Now, we were at 240. Just see this, right? 240. That's the last 7 minutes. 240. We were at 17,600. Oh wow! I don't think I have this wrong. 17,600. 7 minutes back.
It's a waterfall decline.
And
that's the way to put it.
We've lost 200 points in the last 7 minutes.
Guys,
I mean, this has got to be a bit of a record in some senses. 7 minutes, 200 points on the Nifty index. I don't know, you guys, Sandeep, you have any thoughts at all? What's going on?
Well, I think it's the continuation of the selling that we have seen for the last couple of days, and that is that's essentially what's going on. So that is something which will work its way out of the system. The other thing which I want to flag is the next couple of months does belong to China. China is having a major opening up, and therefore there is a recalibration to some extent of portfolios for a lot of foreign investors. So there is a buy China trade which is happening. It should not be at the expense of India, that India has to be sold to fund China. I don't think that is happening. But yes, the weightages are going towards China because China had a very bad last year in 2022. India has had a fantastic 2022. So I think a bit of rebalancing is definitely happening in portfolios. And that trade will continue for some time. The budget does not change the technical picture of the markets per se.
Sure, Sandeep. Thanks very much for that. Guys, I just went out for a quick personal income tax explainer. What did you guys do to the market, really? My God, it's come back to a different texture.
But, to what Sandeep said, right, the rebalancing, if Sandeep is still there, Sandeep, rebalancing, it happens in an orderly way, right? This is something else, you'd have to say. When we're talking about, this is a bit of this is panic. I don't know, you described it like that. Let me actually throw it to Sunil. Sunil, what would you make of the price action?
I think definitely, I don't think this is normalized selling, because if normalized selling would have been there, it would have been right through the day. There is definitely near-term panic, absolutely no doubt about it. And that will always happen when you have such sharp move, in few stocks, because then, the whole sentiment of the market goes for a toss. And, from maybe quite a bit of optimism, right now, you are staring at a lot of uncertainty. And uncertainties normally markets don't like, and you have those knee-jerk kind of reactions. And I would lie if I don't say that even I am feeling a little of what is happening, and we'll have to wait it out. There's no other option.
Okay, maybe folks, if you can just take a very quick snap poll, like a one-phrase poll of what's causing this panic. Let's ask our panel of experts out here. Sunil, yes, there is panic. We see that. What's causing it? What do you think is that one trigger that's accentuating it?
I don't think you have to take a poll. We can all see it, what is.
So the trigger, that's what I'm saying. Is it just that the fact that the budget didn't have anything big bang for the markets? Is that it?
No. I think the budget was fabulous. The budget should have led to the market going up. And, we are all seeing the screen and we all know what is the reason, So,
Okay. Gautam, do you concur? Your sort of quick analysis on what's causing this panic?
Yeah, I think the budget, as Sunil said rightly, was fantastic. I think the one single biggest takeaway from me personally was there was no change in capital gains tax. And that itself should have actually helped the market actually go up today rather than obviously taking it. Direction.
Yeah.
But having said that, I think more to what Sandeep said earlier in this on this interview, that fact is foreigners are indeed putting more money into China. Look at the HSCI; it's up 53% since November of last year. Foreigners were underweight the Chinese market, and I think I sort of have a different view that there is profit booking in India. That money indeed is going to China, and not just China, including Hong Kong. Because don't forget, Hong Kong is the 4th largest market in the world, ahead of India in terms of total market cap. So my view is that money is, the profits are getting booked here. Money is going to those two markets.
Okay, all right. Thanks so much for joining in, Gautam, Sandeep, as well as Sunil. Appreciate you joining in, giving us your comments. As we speak, though, the markets are down closer on 300 points odd, and now the 200 DMA is within around 70 points of going out there. But Nilesh Shah, MD and CEO of Envision Capital, joins us. Hi, Nilesh. Well, you're back in the studio. Markets, in fact, they've done a complete U-turn, though. I was just remembering a couple of these brave